Alrighty, so this is the last section of the technical analysis part of this course. And this is probably gonna be the moment you guys have all been waiting for me to reveal my full-on trading secret strategy that I utilize every single day to smash the market. And that's exactly what I'm gonna deliver to you guys today. So I've already covered a lot of the concepts that I actually already utilize in my trading strategy throughout the course, if you guys haven't realized, but I'm gonna lay out everything for you guys. So first off, it's very simple. I'm gonna make this video as simple and as concise and clear as possible. This way, it makes it so the strategy is very simplified and not too complex. Now, part of this strategy does involve psychology. Obviously, there's so many other parts that are part of a trader's profitability, right? Not just a strategy, but also their psychology, their discipline, and their trade management and risk, and how they're able to actively manage a trade. So the strategy itself is not the only thing that will make you profitable, right? There's so many other aspects of your trading that you have to work on and you have to master as well, not just a strategy. So I'm just showing you guys one part of me as an individual being profitable trading, and that is strategy, okay? So there's other aspects that you also need to get up with, right, and improve on before you can truly master the strategy and making it profitable. But the first step of this strategy from a technical standpoint is big major zones. I just literally, you just draw your big major zones, right? You identify the market type, whether we're ranging or trending, and then you draw your big major zones. Once you draw these big major zones, what I do is I look for fair value gaps, like we mentioned, or zones on a 5-minute, to be specific, time frame. Okay, so we would zoom in and look for these zones or fair value gaps on a 5-minute time frame that have big impulsive moves. Now, this again depends on individual, right? And this is based on skill. Some people can't identify valid zones versus invalid zones. So this is something that you guys also have to work on with experience. But this is part of my strategy, okay? And once you master this, literally, for me, I don't even think about my strategy because I already know my exact setup and exactly what it looks like. So to me, there isn't too much for me to think about. It's literally a buy. I see a setup and I execute with the stop loss and proper risk management. That is it. If it's not my setup, I'm just not taking a trade. It's that simple. I'm literally just not chasing. I'm just not going to take the trade. Not hard at all. So everyone in the trading space, I've realized, is just making trading way too complicated and way more complicated than it really is. Yes, the market is a complex fluctuation of buyers and sellers. It's like a transaction between buyers and sellers. Yes, there's complex things like key levels or like everything. People think you have to combine all of these concepts you learn from trading into one. In reality, you actually need to just find a few of these concepts that are crucial and important. You backtest all of these concepts and you find which ones work best for you and match your personality and trading style, and you execute after you have proven backtesting strategy results that show the objective data that this strategy works. That's literally what I did with my strategy, all right? I spent countless hours, no sleep, just backtesting straight up for so long this strategy to make sure everything is perfect in the strategy so that there are no really major flaws that could lead to not profitability over the long run, right? As long as the strategy is consistently profitable over the long run, that is a good enough strategy. So this is strategy number one. I actually have two strategies, but they are very similar, okay? Actually, I'm just gonna name this entry one, because these two strategies are both reversal based strategies, which I believe have the best risk reward ratio you can possibly get out of any other trading strategy. You just need to understand when it is a safe reversal and when you should not be going against the overall big trend and big momentum, right? You just got to be able to understand price action and read it live to understand whether or not playing reversal is considered a good idea or not. But this is my entry number one. Okay, so entry number one. Actually, you know what? I'm just gonna hold on. Let's just change this up real quick. This is how I look at price. I'm just gonna name it actually step by step, so it's a lot more, I guess. You can see my whole entire process. My whole entire process. I look at market type. Are we in a ranging or trending market? Next, I look for these big zones. So I draw big zones. I'm just gonna name it higher time frame big zones, or major zones. Actually, we just call them major zones. Okay, now after I have identified these two things, I would then look to enter off of one of two of my entry setups. These are my 2 setups essentially. So actually, instead of entry 1, I'm just going to name it setup 1 and setup 2. I have 2 setups that I like to take. These are the only 2 setups I focus on every single day. I don't take any other setup that's outside of these 2 setups because I strongly believe you must focus and master 1 or 2 setups before you continue on to other setups. In fact, I actually believe you just focus on 1 setup in general for trading that occurs frequently enough for you to become profitable in the long run. You don't want to be focusing on so many setups. The reason why is because this has different psychological aspect, different stop losses, different risk management for every single trading strategy. So you want to stick with one, and once you stick with this one, it becomes so much easier. All right, just trust me. Stop strategy hopping and pick one that you backtested thoroughly, that worked best for you, and stick to it. That's it. All right. So for my strategy, setup 1 is I look for a fair value gap or a zone on, I'm gonna name it 5-minute time frame. On a 5-minute time frame. Once I have identified this, I then look for price to enter these areas, right? And I would then wait for entry confirmation. Okay. So what type of confirmation would I be looking for? I'll be looking for a trend break, like we mentioned in the course, or a break of structure. So these are the 2 entry confirmations I need for me to enter these 2 setups. Either an entry confirmation or a break of structure. Now, if I'm entering off of a fair value gap, typically you don't necessarily need a trend break or a break of structure. So this does vary whether or not this is a fair value gap I'm entering off of or if I'm entering off a zone. If I'm entering off a zone with no fair value gap, I would definitely 100% go with an entry to make sure it is fully confirmed. But if it is just a fair value gap that's valid, that I've identified as very valid, I sometimes enter without this confirmation. But that is my setup number 1, okay? So I'm going to show you guys real quick what setup number 1 would look like. So let's move this out real quick. Let's find a good setup we can find right here that aligns with my strategy. Okay, this is perfect right here. This is perfect right here. So setup number 1, identify a key zone. Okay, so key zone I found is we have supply zone right here. This is the start of the move, so I draw a supply zone starting from there. Not too big, not too small. You will get familiar with the size of these zones again with time. So now that I have drawn out my zone, this is going to be following my setup 1 since I don't see any fair value gap, okay? And I may later get into setup 2 when I can find an opportunity to see if I can find setup 2. Actually, I just see setup 2. That's amazing, okay? I'm just going to go over setup 1 first though. First of all, again, fair value gap or zone on a 5-minute. In this case, I have a zone. In this situation, I'm looking for entry confirmation so I don't get wicked out or faked out by liquidity grabs or sweeps. So next, I have a trend break or break of structure. This varies depending on the price action and how clean the price action is. If it is very clean price action, I will use a trend break. If not, I'll use a break of structure. Currently here, this is a currently fine trend because we have faked out over here. So I'm not going to move my trend in line right here because that was a fake out. We can move a little bit more here for more precision and accuracy. I would essentially enter off this break right here, this trend break right here. I go on the 1-minute time frame for my entries, like you guys know. If I can even find price right now, let's see if we can find price. Where did price go? Jeez. This is the only thing that I just don't like about TradingView is how you have to. Okay, I think the 1 minute is not going to show up, unfortunately, all day this far back in June 6th, which sucks, but we'll make do with this, okay? So this is my setup number 1. We're in a zone, we're in a supply zone on a 5-minute, and we have our entry confirmation, which is a trend break. We can also have a break of structure, like I mentioned from my previous lessons about what a break of structure is. When we break this past this previous swing low, make a lower low, or if we're going to go in the other way, break a past swing high. Okay, once we break structure, I then enter immediately off the candle with a strong break of structure. So let's just say the 1-minute candle is here, okay? And we enter off this break of structure. Now, the next thing I want to focus on is I want to focus on my stop loss, right? My stop loss placement is going to be right above, like it's going to be a 1 candle stop loss. I'm just going to put 1 candle. My stop loss is going to be 1 candle unless the candle size is extremely small. So this does vary a good amount on the setup. Trading is very dynamic. You must be able to dynamically adapt to the market. So I'm just going to do a 1 candle stop loss in this situation since this is a pretty solid size candle. If it's a small candle break, I typically don't even enter anyway. So one stop loss candle. And the reason why this stop loss 1 candle works is because I've backtested this a lot, and this is just the best risk reward possible while winning trades. So stop loss of 1 candle, and then my take profit. So I set my take profit as I'm gonna set my take profit at key levels or areas of imbalance. One of these two, okay? So what I like to do is find key levels or areas of imbalance. That's it. Those are gonna be my targets. My take profit is gonna be, I'm gonna do profit. Actually, you know, I'll just keep it TP. Why not? TP sounds fine. Okay, take profit at key levels or areas of imbalance. So for this trade, for example, my final TP would be down here at this swing low or the start of the move. Obviously, never hit that before it hit stop loss, but that's also due to the time, right? We want to focus on the time. So for example, if I was in this trade actively, I would be having my take profit levels at this level here and then this level right here. These are two basically previous levels or previous lows, key levels that I'm looking at that price may potentially react to. So those are my take profit levels. I'm gonna have a take profit level here, take profit level here. So what is gonna be my risk reward ratio for this first take profit? 1 to 2, not bad. Second take profit, 1 to 4, pretty good too as well. And my final, I don't really leave a runner usually, so that doesn't really matter too much. Again, you can utilize a trailing stop at that point for runners if you like. But me personally, I like to just keep my trades very simple as possible. So targeting either areas of imbalance or key levels. An area of imbalance would be fair value gaps. So this right here is a target. I'll also be targeting this fair value gap right here. And that's actually a great target. Look, that's one perfect 1 to 6 target right there. That's the perfectly right when price ends. So take profit is going to be at key levels or areas of imbalance. Now, moving on, so that's going to be setup 1. So setup 1 has a different stop loss than setup 2. So that's something you want to keep in mind. This is based on my back testing. Setup 1 has different stop losses than setup 2. Now, what is setup 2, you may ask? Setup 2 is when we have a fair value gap. We just enter straight off of fair value gap only. I'm only entering off a fair value gap. No zone, no nothing, just a fair value gap, okay? And in this situation, when I'm entering off a fair value gap, actually, I'm just gonna, you know what? I'm gonna get rid of fair value gap here because it's technically the same thing. Yeah, setup 1 would be a zone. So here, let me change this real quick. Zone, 5 minutes, entry confirmation, trend breaker structure, stop loss of 1 candle, take profit levels, key levels or areas in balance. Setup 2 is if we identify a fair value gap that's valid. So make sure, remember, this has to be zone and fair value gaps have to be valid for this setup to work in this trading strategy. You want to make sure you practice backtesting to understand which ones are valid and which ones are not. I have, from experience, understood which ones are valid and which ones are not, so it's much easier. But as a beginner, you definitely want to be practicing this and backtesting before you start going live. So setup 2 is going to be straight off a fair value gap. And what is my stop loss? Stop loss is going to be at the low or high, just basically, let's just say let's say outside of gap. Below or above gap. That's good. Stop loss is going to be below or above, screw it, we're going to do FEG. FEG, fair value gap. Okay, now we want to have a good amount of space still below fair value gap in case we get liquidated, things like that, right? You don't want to become liquidity and become stop loss orders for institutions to put price back into our, targets. Now, for take profits, it's the same thing as the previous one. Key levels or areas of imbalance. That's it. Those are going to be our take profit levels, okay? So that's it. That's basically the gist of my strategy. Literally, these two setups. First of all, you have to have 2 major setups already set up, which is preparation for the strategy. So we can just call this pre-analysis. My pre-analysis would be looking at the market type, where we are in the market, and higher time frame major zones. And if we see any gaps as well, that's another thing. Looking at potential gaps, potential imbalances, or gaps. Okay, once I analyze these three things, I then look for my setups. The setup one is a zone that gets touched, and I enter off a break of structure or break of trend within that zone right after it's touched. It doesn't have to be inside the zone, but right when it's touched. Setup 2, a fair value gap and stop loss below or above fair value gap. And honestly, for setup 2, for fair value gaps, it does not have to be filled or it does not have to be touched. So this will truly be based on the trader, but for me, I read price action live to see if the fair value gap will get filled or if it will just get rejected. You can read price momentum and things like that, and once you understand how price moves for a certain asset, you will know if the fair value gap is going to get filled or not. So again, my entries are going to be a little bit slightly different for fair value gaps, not as precise as my break of structure and break of trends. That is why the stop loss is so much bigger. It's below or above the fair value gap because my entry may differ a lot. So fair value gap entry, I will be looking for a fair value gap, for example, right here. And my entry will be right when it touches, essentially, or when it fills, just depending on how I read price action. And take profits, always the same for me. And then trailing stops, I don't use trailing stops anymore. I used to, but you can for that, for runners especially. So yeah, that's basically it. So we're just going to enter. This is a perfect example of fair value gap of setup 2. This is a perfect example of setup 2 right here. I'm just going to name this actually so you guys can see this clearly. This is setup 2, okay? So setup 2. All right, let me draw this all out, and you guys can even save a copy of this or take a screenshot if you'd like to see my 2 major setups I utilize for trading. But these 2 setups, setup 1, setup 2, okay? And here are my course criteria for these setups. I want to try to make my trading system as simplified as possible. So that's another thing. And then another thing for pre-analysis is obviously risk percent. You want to focus on what percent you're going to risk percent per trade. So after I have all those things marked down, obviously I'll just enter the trade, okay? And entering the trade, let's say enter here long. This is a pretty big thing right here. Okay, we're entering long. Let's just say I enter here, for example, right when it touches. So right when it touches zone or fair value gap, I'm entering. Stop loss perfectly below this fair value gap. And we are going to be targeting areas of imbalance, previous highs or lows, and key levels. So there you go. These are the 2 example trades of these 2 setups that I like to take. Very simple. I try to keep everything as simple as possible so even myself or even like a newbie can fully understand this stuff. Now the rest is just based on psychology, discipline, and experience. Those 3 things will have a major effect on how well you execute these 2 setups. So that's basically my secret trading strategy. Another thing I want to mention about the strategy is also, it was one more thing. Oh, right. About the risk percent per trade. There's a tool in TradingView for you to calculate this risk percent per trade. So this is currently for Forex, but you could do the same with stocks. The problem with options though is because the way contracts move for options, it's extremely hard to calculate really what percent risk is because every contract moves differently. So for options, I typically just try to size the same amounts, and I typically know what my average losing percent is and winning percent is. So I'll go based on the ratio. But for Forex, I would definitely size appropriately based on lot size. So as you can see, what you want to do is once you have your long and short position placed out with your entry and your stop loss, in order to determine size, you want to have a different size for all of your trades because this will vastly improve your risk reward ratio. Every trade should have a different size based on your stop loss. You should be sizing your trades based on your stop loss size, not the other way around, which what other people do, which is they keep the same size but have varying different stop losses. That is not good. The reason why for that is because every one of your losses are going to be a different percent of your count. That is not good for the long run. We need consistent data that shows consistent profitability over time. In order to have a consistently controlled variable system, we need to have proper risk. So this is part of risk management. So let's say you put in your account size here, okay? So once you put in your account size here, you want to put in lot size per unit, okay? So this is something you can see in your MetaTrader. Actually, when you go to volume, I believe, or where you enter a new order in MetaTrader, there'll be a thing next to MetaTrader where it will say like how much units of a certain asset that you're placing on. So for me, gold is 100 lot size, so 100 units per lot. That is my standard deviation or standard size of my lot. So that's extremely important. You want to make sure you get this lot size properly. And then here is extremely important. This is the most important part. You want to risk the right percent. So let's say I want to risk 1% of 100,000 account per trade. I put 1% here. I don't put USD. I'm risking percent. We want to risk our account based on percentages and rather than numbers, right? Numbers are not as accurate as risking percent. I want to be risking by percent. Some people like risking by numbers. That is up to you. But me personally, risk by percent. And these profit entry levels will vary depending on obviously where you move your take profits. So you don't have to worry about all this stuff. This is the main category you got to worry about. Lot size, account size, risk percent. Boom. Once you have that, click on this and it will say next to quantity. This is the exact lot size you want to be putting into your trades. Right here it says quantity 7. This quantity changes based on my percent. Look at this. See, it changes based on percent, account size, lot size. So you want to make sure you get this number right. So for me, I'll be putting on a trade that's a 7 lot size to lose 1% of my account if I do get the wrong trade wrong. Right here, it'll be a 13 lot size right here to risk 1% of my account. What does that mean? Well, if my ratio is 1 to 11, then I'm risking 1% to make 11K, 11% account. That is great risk in my opinion. That is excellent risk management for a trade. That means I need 11 losses to break even. That's amazing. That's great. That just shows you don't need to be focusing on being right all the time. Now, yes, it is really good to have a high win rate because, first of all, that helps your psychology a lot. But that's just something you want to take into consideration as well, your risk reward of your average trading setup and your trading plan and strategy. So those are basically the essential parts of my trading strategy broken down to you guys. Very, very simple. I try to make everything as simplified as possible. Now, I'm gonna try to actually show you guys more examples of my trading strategy. I think that might help a lot of people. So let's see if I can. Okay, let's see what's a good color. Let's just do white for now. I wonder if I can make this thing smaller based on, because this thing's really annoying how it just sizes differently based on. Okay, anyway, here is my trading. I'm just gonna take a screenshot of this actually real quick. I think so I can save this for later to show you guys as well. In the Discord, for those that are in the paid Discord, I will show you guys content like this as well, so you guys can learn things like this because you are also paying for the paid premium Discord experience. Download image, and that should be good. All right, bet. So those are my 2 setups that I take when I trade. Now, let's try these setups in other places, shall we? So let's just look at another setup we can potentially take right here. I see this is around 11 o'clock. Okay, this is near my closing time for my trades. This is around 11 p.m. Not the best, honestly, time to trade, so that won't really work out for me well. Let me see if I can find any other time frame sessions that work within my parameters. This is good right here, but price moves so faster. Iffy. Okay, I'm gonna take an example right here for this trade to show you guys, right? This is a supply zone. Obviously, we are in a major supply zone. We are looking to sell, not looking to buy. So even if you find this demand zone, I'm not playing this demand. Look at how weak the demand move up is because we identified on a higher time frame. This is a strong selling area that institutions want to sell their position at. So we have identified market type. We are ranging. We have identified higher time frame major zones. We have potential imbalance and gaps. Well, we can see we do have gaps. We have a gap right here that did actually mostly get filled. For these high time frame gaps, we do want to switch to a higher time frame to identify them. But on a higher time frame, I'm sure this right here is efficient area of the market and is a gap. So that's something we can consider. And then last but not least, risk percent per trade, which I always set it at usually 1 to 2% max, depending on my account. So there's that. So let's see what setup we are taking today on this trade, okay? So on this trade right here, we can see based on this setup, we have this fair value gap right here. But this is such a minimal fair value gap that I personally wouldn't play it because it is very, very small, right? It's very a minimal fair value gap. This is 0.01%. So I wouldn't be playing this fair value gap. Another thing is because of the time session, this is Tokyo session, the gaps are not respected as well during the session, especially. So I would try to avoid playing these gaps from, especially a gap from a previous time session. I'll try to avoid playing that, right? So let's just, I'm just going to go in replay mode. This might actually help us see the trade more clearly, okay? So we have our pre-analysis down. Now we're waiting for price to move a little bit more. We're on the 5-minute time frame. I'm not going to switch over to 1 minute because it doesn't go this far back. But I'm going to draw my zone right here. This is our supply zone. Now you can make this red if you really want. I don't change my colors because I know it's a supply zone. But, okay, I'm going to keep it blue. Now, this is in alliance with setup number 1, which is a zone setup. 702 will be a fair value gap setup. So actually, you know what? I'm gonna rename this. This is a zone setup. And this is a fair value gap setup. 2 different types of entries with 2 different types of criteria. Now off of this zone setup, I'm looking for an entry confirmation before I enter. So let's play this out real quick. Yes, we already see what price happened, but I'm just giving this as an example of how I would have taken this trade if this was live. Okay, boom. All right, we hit our zone. We wicked out actually a bit more. That could have been a liquidity grab. Not really though. It wasn't that big of a wick, but also due to low volatility. Now, what do? We look for a break of structure. The only problem with break of structure that I have is because we have no bearish candles here. There's no bearish candles here at all. It's hard to find a low point that's a break of structure. So this is when trend lines are perfect because we also have clean. This is one of the best trend lines I've ever seen. Clean price action going up, as you guys can see. Again, this is why I also utilize only trend lines as confirmation and not by themselves, because if you drew a trend line here, you would think this is a break to the downside, which clearly is not true. You want to wait for price to develop further, structure to develop further before you draw these trend lines. So we wait, and price has fully developed the trend line here. Now what do we wait? We wait for an entry confirmation. Okay. So let's see, do we have a strong break? This is a great break right here. I love this break structure right here. Not the best break. Usually the best breaks are when the candle is fully filled with no wicks, but this will do. All right, we are entering here on this 5 minute. Usually enter off 1 minute, but I'm entering on 5 minute here. Stop loss above this candle right here. Give it some room to breathe, especially because it is Tokyo. You never know what happens in this session. You guys can see no stop loss hits. Perfect stop loss. Let's see what happens here. Ooh, stop loss is very closely hitting. Let's see. Okay, extremely tight stop loss. I'll probably have to improve the stop loss. And actually, I just noticed something from this trade. Guess what I noticed? Our stop loss, this is a perfect example here actually of why you should be a dynamic trader and not just follow a specific set of rules. My, again, rule is 1 candle stop loss. But if I do see a fair value gap, we actually see, look what we see. We have a fair value gap right here that needs to get filled and might get wicked. So my stop loss wouldn't be 1 candle here. It would be above this fair value gap here actually. So that's going to be where I would place my fair value gap or my stop loss. So that's something in real time that you would have to adjust and recognize actually ahead of time. So just something you want to be careful with. Now let's see what happens with price. Okay, we should be filling fair value gap. We have filled the gap. We should be pushing down very soon. So we have started pushing down. And now in terms of take profits, this is where I'll be looking at my take profits. Okay. So my first take profit is going to be, I would say this key level right here. This is a very strong key level. It has acted as resistance over here and support in the past and support over here. This is a very nice key level here. I like to only have 2 take profit levels. Don't forget. So I try to limit as much maneuvering the trade as much as possible to keep my stats relatively good. Next, I'll be looking for an area of imbalance. So for my final take profit, it would be probably this area of imbalance right here. This is a very small fair value gap though, I will say. So it's not the best target in my opinion. It's a very small fair value gap, but it will do. Let's see how this trade plays out. Very nice price action. Went back to our stop loss a little bit and draw down. But look at how perfect this key level of take profit is. You see why it's important to have key levels and predetermined take profit levels before you enter a trade. This is the reason why. You can execute and take your partial positions at basically the peak of profit before it reverses on you. Because what happens if you didn't have this level here or any plan of take profits, you would probably take your profit here, up here after this candle because you get scared. And that is way different than taking profit down here. That is a 1 to 3 difference to a 1 to 0.5. So major profit difference. So always have your profit levels in areas marked out before you enter a trade. Now that we have taken take profit 1 at 1 to 3, we have basically secured a very nice trade. Now, what a lot of people tend to do is they tend to move their stop loss to break even once take profit 1 hits. Me, I don't do that. The reason why is I still focus on price action. I look at price action, see if there's a possibility and chance and what are the odds that we continue pushing down further into my final take profit, or if the stop loss should be placed somewhere else. Personally, for me, when I see a candle getting this close to my stop loss, I'm not going to be scared to close out too early, or I'm not going to put my stop loss to break even. I want to give price still room to breathe before it continues down. So let's see what happens here. And another thing you want to notice here is also price moved up here for a reason. Why? We have a gap right here that it touched. So that's another thing you want to notice. You want to notice these gaps in real time. Let's see how price played out. Boom! TP2 final hit. 1 to 5 risk reward trade. Excellent trade off of setup number 1 right here. Look at this, how this area of imbalance was a perfect setup. So I'm just going to save this real quick. This is an example of setup 1. So I'm just going to ask you, you know what? I'm just going to make this video a bit longer, I guess, because I can actually actively show you guys how you can backtest strategies and such. So this is setup 1. I'm going to name it setup 1. And I'm just going to put it right here. This is setup 1. Take profits, everything smashed. Now let's look to see if we can find a setup number 2 style. Okay, I don't see anything over here so far. Oh gosh, that is 8 a.m. Okay, that's when high volatility occurs. I see. That makes sense. You could probably potentially draw a zone here at this point, but a lot of people would have missed out on this trade because your zone will be higher up here. But nonetheless, okay, this area seems like it's done because once gold has done a big move, it doesn't really do much after that. Unless I see something else over here. Let's see. I see something actually here. Boom. This is perfect right here. This is perfect. I'll move this down a little bit more so you guys can see this more clearly. Look at this. We have a fair value gap right here that did not or ever get fully filled. 5-minute fair value gap that we never got fully filled. We got filled all the way till here, but we never got fully filled to the T. So for this fair value gap, I would include this area because price has filled most of the gap, but not the full gap. And look at what happened here. We came all the way back down to the T and filled that gap perfectly. So once we fill that gap, we enter off that gap. Now, once we enter off that gap, this is considered setup number 2, fair value gap setup. Okay, we enter off the gap and we have our stop loss right below the gap. So I'm gonna have it right there, very tight stop loss, and I would have entered here. Now I need to place price back a little bit more so we can not see what future price has done. Now that we have our stop loss and our entry, we'll look for take profit levels. Now for take profit, this is going to be a bit more complex. Okay, the reason why is because this was a very efficient area of the market, meaning price already made an efficient move down already to the market. Now we have a very clear space of not much support or resistance to play off of. So in this situation, when trades go like this, I like to actively just look at the trade and manage it from there based on price action. But if I were to see this in hindsight, or not hindsight, but I would say have targets up here, most likely as probably a final target or something, or a target here. These would be basically the 2 areas that I would have as targets because there's literally nothing else you can see here. This is a very strong move down. Nothing you can really see there. So let's play this trade out. Let's see what happens. Boom, it hit TP1, TP2, whatever. Hit both take profits. There's no really gap here to fill or touch anyway. So unless you go in the 1 minute, there might be something you can potentially find, but that's basically the trade. So I would say let's just give it a safer trade. Let's just say we got a TP risk reward of 1 to 8, which is already that's a really good risk reward ratio trade. I don't see any other scalpers like me that get these massive risk reward trades because they don't know proper stop losses. They haven't done enough back testing to truly see what's the best stop loss to utilize to get the best out of their money in their trade. So that's what I've done here and shared with all of you guys. So again, this is going to be setup number 2. All right, that's going to be it for this video. I'm not going to continue going through any more setups. Again, this very clearly shows how this strategy works and how you guys can utilize this strategy and practice it if you want. Again, feel free to try other strategies if you like, but this is the strategy that has truly helped me become profitable, along with me developing proper risk management, psychology, trade management, and setting strict discipline rules every single day that I follow. So that's going to be it for a technical section of the Essential Traders Official University course. And next section, I believe we are going to be moving on to either psychology or trade management. So look forward to that, and I'll see you guys in the next section.